What's up, everybody? My name is Easton, and I'm the founder of the Art of Six Figures. And today I will be hosting Mike Klipper. He's actually my accountant, as well as, I don't know, 40 or more other photographers' accountants as well. And I'm excited because he, unlike other accountants, he really knows this industry. And he's able to not just, handle your finances and your accounting stuff, but he also knows what's working for other photographers, and he is constantly researching to really position himself to help us come up with other ideas of how to generate more revenue. He's just always there, a phone call away or text away, like, Mike, I'm freaking out about this. And he just is always able to get back to us and be like, all right, calm down. It's not the end of the world. So I'm really excited that he's going to be able to present some awesome info for you guys today. We're going to get started in about a minute. Just going to wait for a couple more people to join us here, the latecomers. But again, my name is Easton. I'm the founder of the Art of Six Figures, and I'm excited to host Mike Klipper here, who's my personal accountant, as well as 40 plus other photographers within the industry. So we got some awesome information for you guys, and I'm excited for you guys to take it and run with it. So we're going to start here in about 30 seconds. Just wait for a couple more people to join, and then we're going to get started, get some great foundational information for you guys to really set your businesses up for success. So before we get started, I just want to touch on a couple things. Number one is that Mike is actually going to give away a free personal tax return prep for you, for one person on the webinar. You guys just have to stay till the end, still be on the webinar during the Q&A when we announce the winner. And in addition to that, he's also going to give anybody that wants to use his services, he's going to give you one free month when you sign up to have him as your accountant. So pretty awesome stuff. I will be able to put links in the chat soon towards the end. But for right now, I want to just welcome Mike. Thank you so much for joining us, man.
Thank you, Easton. Pleasure to be here, man.
Yeah, so I'm just going to turn it over to you and let you get started with this whole thing.
Awesome. I'm going to share my screen.
Sweet.
Do that. Today, it's my pleasure to be here and do this presentation for you. To give you a little background about me before I get started, started in public accounting about 15 years ago. While I was still in college, I did an internship for a small public accounting firm, worked there, took a job with that firm at a college. Over the course of about 9 years, I worked for 2 small public accounting firms in the Philadelphia area. I really enjoyed what I was doing, but I wanted to work with a specific kind of client. I wanted to work with small business owners, and I specifically wanted to work with small business owners in the creative industry. So I started to bring on some clients. I happened to be very friendly with a client who happened to be a wedding photographer, and she started introducing me to some people, and then they started introducing me to some people. And so now, Engaged CPAs, which is my practice, our largest niche is in the wedding and event industry. We probably, between wedding photographers and videographers and other creative and wedding and event industry people, florists, caterers, planners, we probably have about 100 clients in the industry. So we're very up on the what's going on as far as the tax side and the business side of a wedding and event industry businesses, specifically photography businesses. So I meet with, probably every week, I meet with 3 to 8 photographers and meet with them to go over their books, talk to them just about business and their financials and hiring associates, or should I rent a space or not? So all of the important questions that a lot of people ask all the time, I get and I talk to clients about. And like everything it's not one size fits all. So there's different answers depending on your business, what's going on in your life, and we try to obviously work with you on that. The presentation that I'm going to do today, Accounting, Taxes, and Budgeting the Right Way, this is actually a presentation that I did last year at Wedding Wire World. I got asked to speak as a presenter at Wedding Wire World, and I put this together, and ironically, I put it together with a spin specific to photographers. So hopefully this will be valuable to you. If there's any questions afterwards, obviously we're going to have the Q&A. Please do not hesitate to reach out either through email or through phone. I think Easton's going to put up our website and at my direct email. I'm happy to answer questions. At the end, I'll tell you a little bit about how we actually work our client relationships. It's a little bit different than a typical accountant. And we found that most of our clients, especially our photography clients, it works really well for them. So that being said, let's get started with the presentation. So I actually want to start with a quote. I think quotes are kind of silly a lot of times, but there's 3 quotes in here, and they're all quotes I really like and pertain to finances, accounting, and taxes. And this first one by someone who, most people find to be an authority on such things. In the business world, the rear view mirror is always clearer than the windshield. So obviously, your financial data is the rear view mirror. So whatever your books say in your finances, that's already what's happened in the past. And so by understanding your financial data and your financials, it is a great way to figure out what's going to happen in the future and make good future decisions and investments in your business. Financial data is only useful to a business owner if it is accurate and timely. So, every once in a while we'll get a client who will come to us at the end of the year and say, okay, my year's over. I don't have any idea how I did. Can you, put my books together and tell me how much money I made, what I spent money on, how much money did I bring in, how many clients did I have? And we always say, yeah, sure, we can do that. But if you're going to go to the trouble of setting up books, make sure it's done accurately and make sure it's done timely. And the reason for that is that information is what you're going to use to decide, can you afford to bring on an employee? How much can you afford to pay yourself? Which album company should you be using? How much should you be paying your second shooters? There's so many decisions to make. And if you have timely, accurate information, it's going to be very valuable. So in that realm, you have to pick a software. I mean, you could go on and download all your transactions to an Excel spreadsheet, and we, full disclosure, have a couple clients that do that. Obviously, we don't recommend that. The beauty of it being 2017 and we're inundated with amazing technology that quite frankly just did not exist 10 years ago. It's so much easier to run your business than it used to be. So these different softwares are some of the main softwares you'll see out there that small business owners use and specifically photographers use. I will say I do have a bias. QuickBooks is typically going to be your best bet as far as software goes. About 80% of small business owners use QuickBooks as their small business accounting, billing, and balance sheet profit and loss platform. I specifically really recommend the online version of QuickBooks. There is a desktop version where you can just buy the software and then use it regularly. I recommend the online version for a lot of reasons. You're going to have access to your data whenever you want. So if you're on the train, if you're sitting in a movie theater and you need to invoice someone, you can just hop on your phone and you can do it. You can download your transactions. Everything dumps in directly from your bank account. And all you have to do is, for each transaction, put the category it goes to and hit add, and you have a accurate and up-to-date set of books. And selfishly, the reason that we like it at Engage is we have our own login to all of our clients' books that we can log into, and when something gets messed up, something's not reconciled, something got double posted, you're not sure what happened, we can just log in and we can fix it real time, and it's immediately up to date and you're good to go. So QuickBooks is definitely the direction that we push people. You don't have to use it. Obviously, there's other options, and they're fine. But from my experience, QuickBooks Online is a small business owner in the event industry's best resource for accounting software. So one thing to keep in mind, and I'm sure if you're listening to this and watching this and you're a photographer, there's a very good chance that you have a studio management software, whether it's Pixify, who, free shout out, happens to be a client of Engage, or it's ShootQ, or it's Sprout, or 17 Hats, or there's a HoneyBook. There's a bunch of studio management software out there. They're great for what they do. They're great for booking your clients and doing contracts and handling your scheduling. And a lot of them do have a feature that is for financials and tracking income and expenses. In my experience, you are much better off using that software, what it was designed for, and using a platform like a QuickBooks or small business accounting platform that can help you categorize everything, that has a balance sheet, that has a reconciliation feature, and that's going to dump everything in directly from your bank. You're almost always going to be in the best position. And the software nowadays, for the most part, there's really no need to have an outside bookkeeper. I'm sure some people do. We obviously have clients that have bookkeepers. We act as the bookkeeper for some of our clients, but the vast majority of our clients, they handle the books themselves. It's very user-friendly software, and it makes understanding what's going on in your business much better when you're actually the one recording all of the transactions. So this is kind of my philosophy on small business right here. There's basically three important things that every business owner needs to know, and this is what it all starts with, and then you can get down into the nitty-gritty as far as what goes into each of these categories. But there's really three main things you need to know. You need to know how much money you want to make, or how much money you think your business can make. You need to know what your gross profit margin is, or your gross profit percent, and you need to know your overhead. And I'm going to specifically talk about each one of these things, but this is it. These are, if you're in business and you're trying to understand the financial health of your company, these are the three things that you need to know. And if you know them and understand them and how they interact with each other, you're going to be in good shape. And we're going to go over that. So the first thing is, what is your magic number? Anytime I have a client in my office, even if it's a client I've worked with for years, it's very rare that the conversation doesn't come up. How much money do you want to make? How much money do you need to make? And those are two different questions, because depending on whether you're single and you have kids, or you have a spouse and your spouse makes a good salary, or you're trying to save for retirement, there's so many things that go into your life that you need to understand, well, how much money do I actually need to make from my business? Depending on what kind of entity you are, legal entity, and we'll get into that more in a little bit, that will define how you pay yourself. Usually you would either get a paycheck, a W-2, or you would take a draw, an owner draw. But the combination of whatever that is, the money you take out is your annual salary. And it's very good to start with how much you actually need to make to pay all your personal bills, to put away for retirement, and to be comfortable financially and not be stressed out. So the next thing is your gross profit. Okay, so this is a topic I talk with a lot with photographers. So what is gross profit? First, let's define it. Well, your gross profit is the difference between your revenue, to produce that revenue, which is called your cost of goods sold. So for photographers, your cost of goods sold is going to be your subcontractor cost. If you have an outside editor, if you have second shooters, if you have associate shooters. It's also your materials cost, album costs, print costs, direct supplies for any given job. anything that you specifically pay for that's only because you have a billable job, that's a cost of goods sold. So the difference between your revenue and your cost of goods sold is called your gross profit. And then your gross profit as a percentage of your revenue is called your gross profit percent or your gross profit margin. So it's very, very important for a photographer to understand what their margin is. Because if you do, let's say you do, real quickly, you do 30 jobs a year at $5,000 per job. Okay, so your gross revenue is $150,000. Well, that number is important for you to know, but how much of that 150 are you actually keeping before you have to pay for all your overhead costs? And that's where you figure out, if you know your gross profit margin, that gross revenue, 150, and multiply it by your gross profit margin, and then you're left with your gross profit, which is what covers all of your additional costs, your overhead expenses, your fixed costs, which we'll talk about. Average photography studio does between 80 and 90% gross profit. So this is very rare for most industries. Most industries, and because photography is essentially a service industry, the profit margin is very high. So every time I meet with a client, I calculate a client's gross profit margin, and if it's under 80%, that usually means that your prices aren't right or that you're spending too much money to get that job produced. And that's not 100% true, because it also depends on how many associate shooters you have and some other factors. But just generally speaking, a photographer is going to have a profit margin of about 80 to 90% in my experience. So just so you can see an example, I'm a visual person. I'm assuming most of you are visual people. Your gross profit calculation is your photography income minus these cost of goods sold, album, associate, subcontractor, editing, second shooters, and then the difference, those are your cost of goods sold minus the difference between that is your gross profit, and then your gross profit as a percentage of your income is your profit margin. So the third thing that's very important for you to know is, what are your overhead costs? How much, no matter how much sales you have, how much does it cost you to operate your business? And that's called your overhead. And there's different words that different people use for the same thing. So you have overhead, you have fixed cost, you have operating costs. They all mean the exact same thing. They're synonyms. So I like the term overhead, but no matter what term you use, what are your fixed costs? Well, for photographers, they're advertising, their office supplies, their professional fees, their insurance, their expenses that your business has, that you have no matter how much sales you have. It doesn't matter if you're a $100,000 a year photographer or you're a $500,000 a year photographer. Most of these costs are going to be the same regardless of how much sales you have. That's why they're called overhead, and they're fixed costs. So just to show you some examples of what overhead looks like for a typical photographer in our experience, these are some of the examples. Obviously, accounting, advertising, auto expenses. Depending on if you have a studio, rent can be a large expense that photography studios have. Taxes we'll get into a little bit, but this tax number is really if you have a business privilege tax or a mercantile tax, depending on where your business is located. Like, for example, I'm located just outside of Philadelphia, so a lot of our clients are based in Philadelphia, and they're paying a business income and receipts tax, so that would go on this line. And then your travel expenses, your on your business, and that makes up your overhead costs. So now that you know those three things, it's really just so you have your desired salary, how much you want to make, you know your overhead, and you know your gross profit margin. Once you have those things, then this formula allows you to know exactly how much sales you need to have to actually produce you with the salary you want. And that's why these three things are so important, because it's one thing to know how much money you want to make at the end of the day after you've paid for all your costs, but it's another thing to know exactly how much sales you have to make that a reality. And a lot of business owners are kind of working in the dark because they don't actually know what their top line sales number needs to be to generate the desired salary or the net income that they really want to make. So this is just an example just to use real numbers for this formula. So Pete and Alexa want to each bring home $100,000. Pete and Alexa are in a photography partnership. So that's $200,000 in total that the company needs to net. The company is operating a gross profit margin of 75%, which again is a little less than I'm used to seeing, but just for this example, 75%. The annual overhead costs are $70,000 a year based on the example that I showed before of all those overhead costs. So the question is, how much sales do Pete and Alexa Photography need to collect so that both of them can bring home $100,000 before taxes? So you just plug it into the formula. $200,000 in salary plus $70,000 in overhead equals $270,000. 270, which by the way is what the gross profit needs to be. Then you take that gross profit of 270,000 and you divide it by the profit margin of 75%, and you get $360,000. So now we know Pete and Alexa Photography has to have sales of $360,000 to actually hit their goal of $100,000 a year. And now you can actually work this backwards and say, okay, we need to do $360,000 a year. What does that actually mean on a quarterly basis? Okay, we need to do $90,000 per quarter. Okay, what does that mean on a monthly basis? Well, now we need to do $30,000. And again, this is an average. It doesn't mean every single month you have to have $30,000. It just means on average throughout the year, you have to do $30,000. And these are some good goals for businesses to have once they know what their sales goal is. Now you can start tracking them quarterly, monthly, and if you have a good accounting system set up, it's very easy to do this and track it. And then you can throw a budget right into your accounting system and figure out what you need to do, and then compare that to what you're actually doing. And then you can see if you're meeting your budget, if you're over your budget, if you're under your budget. And then you can start making decisions. Oh, we need to market more. Oh, we're going to have actually more money than we expected. How should we reinvest that money into the business? Should we buy new equipment? And now you can start using this information to actually make good business decisions. So what about taxes? This is obviously, I get asked a ton about taxes from our clients, and I'll take the scary picture off the slide. But taxes is a big part, obviously, of what we do, and it's a big part of any accounting firm. And it's a big part of any business owner is, okay, well, you made $100,000, but you didn't really make $100,000 because that $100,000 is pre-tax, and you need to make sure you're understanding what the ramifications of that $100,000 profit is. So the first thing I want to talk about is entity structure. Anytime you talk about photography businesses or really any small business, you have to talk about, well, what kind of entity are they, and what are the tax ramifications of that entity? So most businesses, and specifically most small businesses in the event realm and the photography realm, the business itself does not pay tax most of the time. And there are exceptions, like I said before, business privilege tax, but the majority of the tax that gets paid on whatever profit your business has gets paid at the personal level, because most small business owners are not C corporations. And the only entity that actually pays federal and local taxes, nope, I'm getting a message from Easton. Most small businesses that are paying.
Hey, Mike, real quick,
yes.
you have to share your screen again because people can't see it.
Okay. So sorry about that. Do we have any idea where I got? Somehow it got unshared.
There you go.
All right. Sorry about that. All right. So, okay. So as I was saying, most small businesses are not C corporations, and C corporations are the only kind of entities that actually pay tax at the federal and state level. Most people run businesses that are called pass-through entities. Okay, so what are pass-through entities? Well, there's really four different kind of pass-through entities that you might be if you're a photographer. So there's a sole proprietor. So what is a sole proprietor? Sole proprietor is anyone that has a business that has not registered. They're just, I'm starting a business. You might register the business name, but outside of doing that, you haven't actually created a legal entity. And if you do that, which is not recommended, but if you do that, all of we file what's called a Schedule C within your personal tax return, and all the taxes, all the profits that you made from the business, the tax on those profits are paid at the personal level. An LLC is exactly the same way from a tax perspective. The only difference between an LLC and a sole proprietor is the liability. So I always recommend, no matter what your situation is, at a minimum, a business owner become an LLC. And the reason is it's a one-time cost. You can do it yourself on LegalZoom, or you can have an attorney do it, which is typically what I recommend. You can have the LLC created, and once the LLC is created, you're done. But the advantage of the LLC, again, is not on the tax side. It's if you're ever sued for any reason, or specifically if the business is ever sued, the person that's suing you could really only come after the assets of the business and not your personal assets. So if you own a home, or you own a car, or you have money in the bank, or you have expensive jewelry, obviously you don't want those assets to be on the line in case you're ever sued for any reason. So I always recommend that an LLC be created, but again, from a tax standpoint, it's the exact same filings for an LLC business as it is for a sole proprietor. Now, once you're an LLC, let's say you have a partner. Once you have a partner, it's more than one owner, that LLC return is not filed within your personal tax return. You have to do a separate tax filing for that partnership. And that tax filing on the federal level is called Form 1065 partnership return. So that is an additional filing you would need if there's more than 100% owner of the business. Even if it's 99%, 1%, you're still required to file a partnership return for that business. You're also able to elect what's called S status, or become an S corporation if you're an LLC. And there are some tax benefits to being an S corporation, which I believe I get into later on in the slides. But generally speaking, you can reduce the amount of Social Security and Medicare tax that you pay if you're set up as an S corporation. It has the same legal protection as the LLC, and an LLC itself can be taxed as an S corporation. You can either be taxed as a sole proprietor when you're an LLC, or you can be taxed as an S corp. But all of these entities that I have listed here, all of them are what's called pass-through entities, and the income is taxed within your personal tax filing. So again, huge misnomer. People think LLC has something to do with the IRS. The IRS actually regards an S corporation as a disregarded entity, so they don't even recognize an LLC. They treat it exactly as a sole proprietor unless you've elected S corporation status. But I do highly recommend it for all business owners over and above a sole proprietor. So it's very important, and this goes back to what I started saying when I was talking about setting up your books in some kind of accounting platform. It's very important that you not be surprised by your taxes. Having the financial data and having accurate data is not only good for making good business decisions, but it's also really good for it's also very good for tax planning. So what we do with all of our clients that we meet with on a regular basis is, in addition to talking about the actual numbers and where the business is headed and what the goals are, but we also do tax planning, and we put together a spreadsheet. we figure out, okay, if the business makes this much, the business has made this much to date, what are you expecting is going to happen the rest of the year? Okay, if that happens, this is what's going to happen on the tax side. This way, you're not surprised at the end of the year by your tax bill. A lot of our clients have already paid in their taxes through quarterly tax estimates based on this tax projection, and then come April 15th, they don't have a tax burden. Some clients prefer to pay it at the end of the year. They like to know what the tax charged, a small penalty for not paying in the quarterly estimates. They would prefer to spend it. But at the end of the day, it's really just important for you to know what that tax burden is going to be and how your income affects what your actual tax burden is, and more than just the business side, because most of the entities are pass-through entities. So your spouse's income, whether you have kids, whether you do retirement planning, there's a lot of different factors that can come into the tax side. So how do you decide which entity should you be? Should you be an LLC? Should you be taxed as an S Corp? At the end of the day, talk to your tax professional. Talk to your lawyer. Talk to your accountant. Have the discussion. What are the pros and cons? It's something we talk to our clients about all the time. Most of our clients start off as an LLC, and then once they get to a certain level of profit and a level of sales, we typically recommend going the S Corp. We talk about the advantages, we talk about the additional costs, and then we let them make that decision. But it's a decision you should have, obviously, with your tax professional. Going into that, I'm going to do my second quote of the day. Great things in business are never done by one person. They're done by a team of people. So just because you have a business and you're running it and it's your baby, you're the 100% owner, doesn't mean you don't need a really strong group of team members on your side helping you along the way. So this is just a short list of some examples of what I feel like should be some of those people. You should have a lawyer. It doesn't mean you need to have a lawyer on retainer, but it means you should have a lawyer that you trust, that when stuff comes up, if you need someone to review a contract, if you do get into a legal dispute, or you do need an entity set up, you have a consultation with a lawyer and someone that you trust. Obviously, I think, and I'm biased, you should have a good CPA that you work with, someone that understands the tax ramifications, someone that understands, your business and what the business means, and helping you understand the numbers and how to make decisions based on them. Obviously, you should have business insurance. I think you should have a relationship with a financial planner, maybe not day one of your business, but you need to, even early on, even if you're in your mid-20s or you're in your mid-30s, you should have a financial planner. You should be talking about the ramifications of making retirement plans, IRA, SEP IRA, 401k. There's a lot of different options for self-employed people, and I think it's really important to talk to a financial professional. Graphic designer. Obviously, we live in a very visual world. Some of you probably even do your own graphic design. It's very important for you to have an up-to-date website. It's very important for that website to work properly and that you're getting all your emails and that everything looks good. If you're a photographer, arguably the most important thing out there is that your visual marketing and what it shows on your website is a good representation of your business and what you want it to be. And don't pinch pennies on the graphic design side, because it's a very important. It's hard to go apparel. It's important for you to have an apparel company and do that. And it's obviously important for you to have a relationship with a banker or a bank down the road. Let's say you want to buy a piece of equipment. You don't want to fund it through your business. It probably makes sense for you to have a relationship with a banker. It makes sense. You might need a line of credit. You might need a term loan. Maybe you need a new vehicle. Maybe you want to purchase a building. There's so many things that can come up where a relationship with a banker is valuable. And so how do you build this team? It's a very hard thing to do, but start with the people you know. Get referrals from other business owners. Get referrals from friends and family. Make sure Arguably, obviously, the work you do is extremely important, but it's very, very important to have a good team in place and to make sure that that you have people that you trust that are helping you, because you're doing the day-to-day work, you're doing the shooting, you're doing the editing, but it's not just you. You need to build a team that's going to help you grow to that next level, because at the end of the day, what your business really is an asset, and you need to make that asset become as valuable as possible, and think about the future, think about 2 years down the road, 5 years down the road, 15 years down the road, and plan accordingly right from the beginning. That's the end of my presentation. I really want to thank everyone that's on the webinar today, and anyone that watches this afterwards. That's our website, engagecpas.com. We have a very unique model that we use for our clients. We don't do hourly billing. All of our clients are on a fixed fee retainer based on whatever service they need. It's very rare that we can't come up with a budget that works for a client and works for their needs. So we try to add as much value to the client as possible. All of our retainers include being able to reach out to us anytime you have a question about anything business-wise, and obviously the planning services and the tax services. So give me a buzz, shoot me an email. Happy to talk to you and learn about your business, your time today. Thank you.
Awesome. Thank you so much, Mike. Guys, if you guys have any questions, feel free to type them in the chat there, and we'll use some of this time to let Mike answer some of those questions. I just want to pick a winner for the free tax planning session, or taxes for your personal return. We are going to go with, let me scroll through and randomly select someone. Daisy. Daisy is the winner. Daisy, if you can type in the chat your email address, and that way Mike can reach out to you. All right, congratulations on that. Also, any of you guys that go ahead and reach out to Mike, I would say just give him a call regardless, even if you don't end up going with him as your personal accountant. The guy is filled with knowledge and can probably guide you in the perfect direction. So I would say definitely reach out and take advantage of the 1 free month if you can. So we got that winner. I just want to go ahead and do this poll real quick. If you guys want to answer this poll, that would be awesome. Just want to know if you guys do use an accountant right now. And if you do use an accountant, is it somebody that you always have, or do you just use them like once a year when it comes tax time? You just have them do your taxes for you. Type in the chat if that's the case. All right. I personally have a question, Mike, for you, just to kick things off. At what point is it good to make the switch to an S corp?
Say that one more time, Easton. I'm sorry, I was having trouble hearing you.
At what time is it like the right, or what is the right time to make the switch to an S corp?
Is it good to switch to an S corp?
Yeah, when is it good to switch to an S corp?
Gotcha. Yeah, so we typically recommend for our clients that they strongly consider, we usually have the conversation once profits get to around $60,000 or more on a year-over-year basis. So we don't always recommend it right off the bat for clients to become an S corp, because it's a more expensive entity, and it's a more expensive entity for 2 reasons. The first reason is your accounting fees are going to go up, because in addition to now needing to file your personal taxes, you also have to file a separate S corp tax returns, both federally, state, and sometimes locally. So there's more accounting work to do. The second reason is once you're an S corp, the owner of the S corp has to go on payroll for a portion of the profits, and obviously you're going to have to pay a payroll provider a fee for that. As a general rule of thumb, I advise clients, once you become an S corp, your total professional fees typically increase by about $2,000 a year. So that's the bad news. The good news is, and the reason we use the $60,000 number is, if you do it smart and you pay yourself a portion of that 60,000 through payroll and a portion through a distribution, you can significantly reduce the amount of federal taxes you have to pay, because the profit for the S corp is not subject to Social Security tax. So, and that's usually the number where the tax savings is significantly enough more than that additional $2,000 cost that it makes sense to do it. So to give you a long-winded answer to your question, around $60,000 is typically when I recommend having that conversation with your accountant.
Awesome. Yeah. I know when you switched us over to an S corp, we went from the year prior, we owed like what, $25,000 or something close to that, and then once we switched this past year, we only owed like $7,000, and we made a lot more money.
Yeah, it's always a fun conversation the first year someone becomes an S corp, because I always do the calculation to figure out like what was the actual advantage and the savings, and it's very, very rare that it's not a relatively significant positive. So, but I've also had clients that have done it too soon and haven't had a huge advantage from it. It's not going to hurt you, but to get the true advantage, you want to have a regular profit stream of around 60K.
Right. Okay, cool. We have somebody texting me right now that says that they can't ask their question, so I'm just trying to see if they want to tell me it. Wonder why people. Are you guys all having problems with the chat? I guess they wouldn't be able to tell me if the chat's not working. Yeah. Oh, here we go. So if people are not in New Jersey or Pennsylvania, can they still use your service? Like what states are you able to help people in?
Right on. So we're a national firm. We have clients. We have wedding industry clients all over the country. We do taxes in every single state. Obviously, if someone's like way far out of the area, when we do have our meetings, we do them over the computer. We do them over conference call, which works fine. We're working with Lou-Ray, so we're working with clients in New Jersey. We have a very large client base in the New Jersey area, and just the general tri-state area is where the majority of our clients are. But yeah, we can work with you no matter what state you're in, for sure.
Awesome. Yeah. I think the most valuable thing about working with you over these past couple of years is that when we first started working with you, I don't even remember, what kind of revenue we were bringing in, but I know it was nowhere close to what it is now. And just to have that phone call and know that you're like just a couple minutes away. How many times have you like had to talk me off a ledge?
No comment. But
yeah.
But yeah, I mean, that's like, there's definitely, there's the accounting side of what we do, and then there's the consulting side of what we do. And then, the reality is, obviously with you guys and with all businesses in this area, it's people. I mean, you're not just dealing with, you guys are dealing with people on your side, you're dealing with your clients. Mm-hmm. And, stuff happens in life that's not always business related, but it does affect the business. And there's stuff that comes up that you gotta address. And, mm-hmm. Obviously we try as best we can to support our clients and give them value, as opposed to just putting some numbers on a tax return and telling them what they owe. So that's we love that part of what we do.
Very cool. Guys, I'm going to give you like 1 or 2 more minutes for questions. So if you got them, make sure you type them in there. If you're not seeing your question show up, refresh your screen, and you should be able to do that. Jared said, for those filing as an S corp, how would you suggest they determine a reasonable salary?
Yeah, great question. Great question. So a reasonable salary is the IRS does not define what a reasonable salary should be. So we kind of have our own rule in-house of how we typically do it. We usually recommend a client, if they're an S corp, pay themselves between 60 and 65% of the net profit before their salary. So for just a simple math example, if you're netting $100,000 after all your costs, $100,000 profit, I would recommend a salary of between $60,000 and $65,000, and then the remaining portion of the profit, if you want to pay all of it to yourself, you can, but you would do that through a distribution. Obviously, the first 60 to 65% would automatically have taxes taken out and would make the year-end tax burden significantly less. And then the amount that you don't payroll to yourself, the remaining profit, you would either owe money on at the end of the year, or you would want to pay quarterly tax estimates on that profit. But that's usually the how we deem a reasonable salary. We've never had a problem with it using that basis. It usually, you just want to be reasonable. You don't want to have a $100,000 profit and pay yourself $10,000 a salary. It's going to look weird, and obviously the last thing you want to do is raise red flags to the IRS or anyone. So you want to keep it reasonable. I would say you don't want to go any lower than 50%. You don't want to go any higher than maybe 75%, because you do want to get the savings, the tax savings, and the benefit of the S Corp by running some of the profit through distribution.
Very cool. And so just correct me if I'm wrong, but the savings comes from the 15% self-employment tax that we have to pay. You save basically half of that.
Well, so what happens is so if you're not an S Corp and let's say you have a $100,000 profit, you have to pay essentially 2 federal taxes. You have to pay whatever your regular tax is, and you also have to pay, as you said, self-employment tax. And the self-employment tax is approximately 15% of your profit up to the first $118,000, and then it goes to about 5% after the first $118,000. If you go S Corp, the only whatever profits you don't payroll to yourself, you don't have to pay that 15% tax. So on the first, to use my example again, $65,000 of salary, you're going to pay that tax on the $65,000. It's not going to be called self-employment tax. It's now going to be called Social Security tax and Medicare tax, but it's the exact same tax, and you have to pay that. The company pays half, and you as the employee pay half, so you have to pay the full 15%. But whatever you don't payroll to yourself, that remaining $30,000 or $35,000, that's where you get about a 15% savings, because that $35,000 is not subject to the 15% tax. So if I work it into my calculator real quick, 15% of 35,000 is about $5,200. So you have $5,200 of tax savings. Now let's say with the additional cost, let's say it's $2,000, you're up $3,000. Grows, the more that savings is. And you also have to think of it from a cumulative perspective. If you save net $3,000 over a 10-year period, you just saved $30,000 of tax just by being an S Corp over a 10-year period. So it can be very valuable to business owners.
That's awesome. All right, Brian said, what accounting software would you recommend for an LLC making $15,000 to $20,000 a year?
Yeah, I always recommend QuickBooks, no matter the size of the company. It's great for huge companies, and it's great for small companies. QuickBooks Online specifically has 3 different versions. They're all a monthly fee. You would be absolutely fine, and quite frankly, most business owners would be fine with the cheapest option, which is called the Simple Start, QuickBooks Simple Start. They just increased the price. I think it's now $10 a month, but it's still, if you think about it, it's pretty insignificant cost, and it does all the important stuff that you need it to do. It'll link to your bank account. You can download the transactions. You can record everything easily. You can do invoicing. You can, obviously you can run all the reports you need to run, and it's a great software. And if there are some features it doesn't have and you want to upgrade to the second or third level version, you can easily do that at any time. But I would recommend, for a business that size, I would recommend the Simple Start.
Nice. Jared asked, is there a resource from the IRS showing what the average claimed salary is?
It's a good question. So I honestly don't know the answer right off the top of my head. What I will tell you, though, is anytime you file a tax return, um, there's no like norm as far as salary goes, because every business, you can have a $15,000 a year photography business, and then you can have a $500,000 a year photography business, and obviously the numbers are going to be significantly different depending on which business you have. That said, what I will say is when you file a tax return, you put a code, or I should say your accountant, unless you prepare the return yourself, puts a code what kind of company it is. And when we do it, we have to look it up for each individual client depending on what kind of entity they are. I want to say the photography code is like 52990, and I'm not sure if that's right, but it doesn't really matter. But some nerd information. But at the end of the day, what that code is for is that's information for the IRS, and they use that code to figure out if your income and your expenses are reasonable based on what kind of company you are. So I once had a client, and I actually didn't prepare the return, but I helped them through the audit. They got audited because they were a construction company, and the IRS, based on their code, expected their certain expenses to fall in line at a certain level, and their expenses didn't, and they got audited because of it. And nothing happened with the audit. They got through the audit, they didn't owe any money, but it was because some of their numbers looked a little strange that the IRS questioned it. So what I'll say is, obviously be honest, obviously make your numbers as reasonable as possible, and you should have no issues.
Awesome. So real quick, is Daisy somebody that works for you?
Daisy is in the office next to me.
Okay, so she's the one that I called out to win, so that is pointless.
Daisy, I'm doing your tax return.
Yeah, let me scroll through here real quick. All right, we're gonna give it to Serena. Serena, you're the winner. So if you could just let us know that you're still on, you're still with us in the chat, and we'll connect you with Mike. Cool.
Cool.
Awesome, guys. Well, thank you so much for everything. Mike, you're awesome. I love this information. I think it's super valuable. I know it's boring stuff, but at the same time, when you don't have this in place, it's a nightmare. And I don't know. I'm still a mess, even though I have you, and that's just my fault. But without you, I was a disaster. So it's crazy. The amount of change that's happened in our business just because we do have the right team in place now it's just been astronomical. And you don't know what you're missing until you have a taste of other people that are also good at like specific things that you're not good at, and how that can really transform your business. And so the moment that I started to position myself and have an accountant and an attorney and office manager and things like that working for me, that's when I was able to just concentrate on the stuff that I'm good at doing and the stuff that I love doing. So I'm much more excited about it. I'm less stressed out about everything. It works out so much better. So, Jared, hey, Mike, what's the office phone number? I'll just put that in the chat so people can give you a call.
Absolutely. So you can call us at 1-800-611-7014. You can just dial 0, or my direct extension is extension 700.
Awesome. All right. Well, how long is the replay going? I like my hubby to watch. This entire webinar is going to be archived on the Art of Six Figures site. So you'll get a replay sent to you that'll be good for at least 24 hours. And then check the website in the next day or so, and we should have it uploaded onto the site so you guys can watch it again. All right. Thank you, Mike, again for your time. And guys, have a great day. And I hope that you take this information and run with it. And we'll talk to you on the next webinar.
Thanks, Ethan.
All right, I'll see you.